Hey guys, so Washington is in full hunt the scapegoat mode. They're trying to blame this whole bank panic on the Silicon Valley bros, the tech bros. They're also trying to blame it on crypto, these shadowy super coders. Of course, this isn't about tech bros. This is about the systemic risk caused by the Federal Reserve and by government spending. The tech bros are, of course, a distraction, a gaslighting. In fact, the tech bros were created by the government spending and the Federal Reserve, ironically enough. So the systemic risk is that the Fed, throughout, since its creation, it subsidizes lending. So that's a hundreds of billions dollars per year subsidy that goes mainly to the federal government. It goes to Wall Street and it goes to rich borrowers. Maybe contrary to public assumption, most borrowers are in fact rich. And then meanwhile, the Federal Reserve subsidization of loans effectively offers a permanent bailout to bankers. This is called the lender of last resort function. And that lets them operate in what is technically default. The money customers think is in the bank is not actually there. It's somewhere else. It's lent out. So like clockwork, this leads to a boom-bust cycle where you get inflation, then you get recession, and then you get bailouts. We get ridiculously cheap money in the early stage, in that boom stage. That burns like a tissue fire, right? It burns bright, but it burns very, very short. That then leads to a crash, which opens the political Overton window for all kinds of shenanigans. And then we get the bailouts. They laugh, we cry. It's a big club and you ain't in it, as George Carlin said. So we saw this in living color these past couple of years. The Fed dropped rates early in COVID in order to enable the lockdowns. Those predictably caused inflation. So then, of course, the Fed ramped up rates to stop inflation. Now, they could have stopped the inflation by simply telling the federal government, we're not going to subsidize you guys anymore. You've got a spending problem. You've got to stop it. What, of course, the Fed did instead is they said, no, leave the federal government be. That's our boss after all. Instead, we are going to crush jobs. We're going to crush the broader economy. What those rate hikes did is that they savaged bond prices, right? That was the fastest pace of interest rate hikes in 50 years. The banks across the US, they hold generally long bonds in the vault, right? So if you hike rates fast like that, then the bank thought they had $1 in the vault. It turns out they only have 80 cents or 60 cents. Then you get the bank panic. Now, what should the Fed have done? Well, easy. They should have told the government from day one, early in COVID, they should have said, no more, we're not subsidizing your spending orgy. You're going to have to make do. And then either the government would have cut other spending elsewhere in order to do their lockdown experiments, or most likely they simply would not have done that. Therefore, we would not have gotten the inflation. We would not have gotten the historic rate hikes that are now killing banks. Instead, of course, they broke the economy, they broke the banks, and now they scramble for the scapegoats that, ironically, it was their easy money that created those scapegoats. It created the tech bros. So as always with government, they break it, then they blame the people that they hired to break it. All right, see you guys next time.